Be Wealthy and Smart, episode 362.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, I'm going to talk about the sectors that ranked the best performance-wise through not only 2017 on a one-year basis, but also a 3-year average, a 5, a 10, and a 15-year average. So you can see what sectors have performed best in the short term and the long term. And sectors are very interesting. They are, of course, non-diversified categories or asset classes that you can invest in that just focus on a very narrow part of the market. And because of that, because they're not broadly diversified, I only recommend that you put maybe a 3% position in any one of these or 10% total sectors in your asset allocation of your total portfolio. So maybe in your 401k at work, you might have some of these available to you, but you might not, because a lot of 401ks have a very short list, limited menu. So you'll have to check and see if any of these exist in your 401k. It's not a given. But if you have an IRA, certainly these sectors are all available to you because you don't have a limited list of what to invest in an IRA. So these are very interesting. Again, I'm not sharing them with you to suggest that you invest in any one of these. I'm simply sharing this with you to, number one, make you aware of trends and where the trends are and where they aren't. Number two, I believe that money moves in cycles, and so we can look at where the trends and cycles have been and maybe where they're headed. And number three, to give you good examples of high compounding rates, because in my new book that's coming out in September, I talk all about compounding rates, and compounding is really synonymous with wealth building. And so I've talked about it in the 6 steps to wealth and being the 4th and 5th step, investing in a money engine and then compounding at a high rate. And so compounding is really the backbone of wealth building. So to share with you these higher compounding rates, again, is not to say put all your money in these or to even to put any money in these, but certainly to say be aware of what's happening out there, be aware of where good performance has been, be aware of what actual compounding rates have occurred over a 10 and 15-year basis that you might not even be aware of. This is a very interesting chart I'm sharing from Investors Business Daily, and let's go forward with the top sector for 1 year ended in 2017, and that is the global science/tech sector of 43.9% in 2017. Wow! That's spectacular. So global meaning not just in the United States, but all over the world, any science and technology categorized stock that did well could be included in this sector. And so it's interesting to see how well those performed. But that's just on a 1-year basis. Let's look at the 3, 5, 10, and 15-year winners in the sectors. So on a 3-year average annual return, guess what? It was again the global science and technology sector that performed at 19.84% for 3 years. What a tremendous compounding rate. But look, at 5 years, same category was up 21.27%. And it also was the best for the 15-year period at 13.83% average annual return for 15 years. So the global science/tech sector has really run away as the leader for 15 years. Now, it didn't hit number one in the 10-year average category. It hit number two at 11.54% for 10 years. So still a tremendous compounding rate for 10 years. What outperformed it on the 10-year basis was just regular health/biotechnology. So that did a 12.4% return for 10 years. So global health science tech is the big story for the last 15 years. That's an amazing average. It didn't start out too well this year on a one-year basis. It's down 0.48%, so down less than 0.5%. Not starting out the first month, but that doesn't mean anything. In the fourth quarter, it was very strong, finishing second at 6.35% for the quarter, behind the global natural resources, which was actually up the best for the quarter, 6.45%. So I know I'm spouting a lot of numbers here and I don't want to get you confused. I want to stay with the big picture. So let's go back to the trends and what else is looking like a really strong trend. Besides the global science/tech, the next biggest trend I would say would be the regular science and technology. So that would not be global. That would be by definition in the United States only. And on a one-year basis, that was up 36.96%. It was the second best performer last year as a sector. On the three-year average, it was up 16%. It was the second best performing sector for 3 years. On the 5-year, it was up 18.92%, second best performing for 5 years. On the 10-year average, it was up 10.27%, actually third best, because remember we had global science and tech number 1, we had health and biotech number 2 for 10 years, and then on the 15-year basis, it also was third best at 11.9% average annual return, where we had global science/tech number 1 at 13.83, we had health and biotech at 12.85, and then science and tech at 11.95. So again, technology is where it's at. That has really been the global driver of sector performance, science and technology in the US, and health and biotech has been second or third for the 1, 3, 5, 10, and 15-year averages. So health and biotech on a one-year basis last year was up 25.81%. It was third best. On the 3-year average, it was up 6.75%. On the 5-year, it was up 18.2%. On the 10-year average, 12.4%, and on the 15-year average, 12.85%. Interesting to see tremendous compounding rates of return. Really great high double digits and low double digit rates of return. So extremely strong rates of return. Did you know the Betterment approach to investing can help by diversifying your portfolio, automating systems to rebalance back to your original asset allocation, taking the emotion out of investing, and providing lower fees than traditional financial advisors while generating 2.66% higher returns than the typical do-it-yourself investor? They use index investing rather than active management because they found that the index fund portfolio outperformed active funds by 1.01% on an annualized basis. Betterment's tax-coordinated portfolio can increase portfolio value by an estimated 15% over 30 years, and they have a low advisory fee of 0.25%. Betterment is the largest independent online financial advisor with more than $10 billion in assets under management, with more than 300,000 customers. Of course, investing involves risk. Listeners of Be Wealthy and Smart can get up to 1 year managed free. Visit betterment.com/be wealthy. That's BETTERMENT.com/be wealthy. I'll post these links in the show notes and on my website. And now back to our podcast. The interesting thing here is real estate is one of the categories of the sectors here. And real estate did not even have a double-digit rate of return, except on the 15-year average, it was up 10.22%. But on a one-year average, up 6%. Real estate was up 4.93 on a 3-year average, 5-year average up 8.46, and a 10-year average 6.79. So interesting that real estate, even though we see it exploding around us in most of our communities, at least in the U.S., we see crazy markets. We see people at record buying levels of houses. recently in the last year, and yet it's not showing up as a strong sector in the stock market averages, which is really interesting. The other categories of sectors in this chart are global natural resources, which had a dynamite fourth quarter and led every sector. It was up 6.45% for the fourth quarter of 2017. And natural resources up 6.4% for the fourth quarter of 2017. Could be a new trend starting, could be a new cycle starting there. We also have financial services as a sector, which on a 1, 3, and 5-year basis have nice double-digit returns of 15.63 on a 1-year, 11.48 on a 3-year, and 15.1 on a 5-year basis. So financial services, because of the low interest rates, because they've been able to give lots of mortgages out there, because they've been able to make big spreads in credit cards between what they charge and what you're able to get in your savings account. Huge spreads there. Financial services have had tremendous profits, which has driven their performance in the last 5 years. We also have telecommunications in this chart, and on a 1-year basis, it was up 10.2%. The only time it was up double digits in the last 15 years, but had a strong 1-year showing. We also have precious metals equities on a 1-year basis up 8.38%. We have utilities up 13.04%, and global health and biotech up 17.81% on a 1-year basis. On a 3-year average, 4.4, 5-year average, 15.77, 10-year average, 10.03, and a 15-year average, 10.36. So what does this tell us? It tells us that technology has really been driving the sectors. They have been where a lot of the engine has been in terms of profitability and progress. We have seen that on a global basis. We've seen it in the U.S., and we may continue to see that. I would imagine we're just in the beginning of a tremendous global science and technology boom, of course. So I think that can be carried on for a long time. I don't see that we're, for any reason, having a slowdown in any technology that's coming out. If anything, it seems like things are accelerating and disruptors are accelerating, and we're going to have more interesting technology come out. So that's an interesting sector to look at. Again, if you want to pepper some of your portfolio with a sector or two, I think that can be very interesting. Just don't overdo it. Also, I always recommend talking to your financial advisor if you have one and seeing what they think, and not ever taking this as an investment recommendation. I will post this on my website so you can see the chart. I know there were a lot of numbers in here. Thank you for hanging in through that. I tried to really make a story out of this and tell you the big picture, as well as giving you the numbers that back it up. So if you want to look at the chart, I will post it on my website at Linda P. Jones. And while you're there, if you want to pick up my 11 quick financial tips to boost your wealth, there are 11 quick things you can do to get your financial freedom moving faster. As a bonus, I will also post the fixed income performance for the last 15 years. So if you want to see how treasury bonds or junk bonds or Ginnie Mae's or municipal bonds or world income have performed over the last year to 15 years, I will also have that on the same chart. So I'm not going to read that now on the podcast, but if you want to review that, that's posted on my website as well. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.